Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 a.m. Eastern on Thursday, the 22nd of December, 2016. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I want to take a minute and say happy holidays to everyone, um, for those who observe and those who don't. Um, I'm just in gratitude of this past year being what it was, and for having you here. I know people are starting to scurry off to different parts of the planet to be with family, and I just wanted to take a moment now to say thank you, and hopefully we continue to build a community together by just communicating openly about what we do as traders. I think it's very important. Um, with that, let's move on to the news that's driving the market overnight. Overall, very, very quiet. Wednesday was, by some measures, rated as the most boring day for stock trading since 1992. Wednesday's intraday range of 1.9 basis points was the tightest Chris, Chris, since Christmas Eve of 1992. Um, anyway, and then in addition to that, there's stuff going on with the oldest bank in Italy. It's getting closer and closer to a bailout. It's expecting to run out of money in March or April. Um, and then other than that, we just got a slew of numbers at 7:30 Central, 8:30 Eastern. There's a release by Trump, President-elect Trump and his team, saying that they're considering a 5% tariff on foreign imports. I think that's going to have a much, if this is implemented, it could have a pretty negative impact, um, because tariffs are just passed on to consumers. They're generally not something that companies absorb, and consumers still want foreign products. So I don't know. It's very difficult to, it's very frivolous in my opinion. It's very difficult to decide what's serious and what's not. At 7:30, we got durable goods orders came in at negative 4.6 versus negative 4.8, so slightly better. Initial claims came in much worse, 275,000 versus 257,000. Continuing claims came in at 2.036 versus 2.01 million. And then the final GDP price index, 1.4% in line. And just now we got the October FHFA house price index at zero point 0.4, slightly worse than, slightly lower than the zero point 0.5 expected. And so that's where we are. As far as what's on deck and what's remaining, we have a 10 o'clock Eastern number. That's the US PCE core month on month for November, 0.1%. Core PCE core year on year, 1.7%. PCE deflator expected at 0.2, all at 10 o'clock. In addition to that, we get personal income expecting for November, expecting 0.3. Personal spending expecting 0.3. Leading index for November also at 0.1. And then we get EIA natural gas at 10:30, which has not moved our markets. And then Kansas City Fed at 11, which is a low significance number. Other than that, the deck is clear for the rest of the day. So I'm expecting much of the same. Let's take a look at what we expected yesterday versus what we got. Primary hypothesis yesterday is for an open auction, which we got. We got an open auction. The expectation is for a test of the value high and value low, which we got. We actually tested value low, then value high, and then the primary expectation was for it to continue on this track, and then start to rotate up, which did not happen. So hypo 1 did not take place. Hypo 2, a test up to value high, a pullback to the point of control, failure beyond value high, and then staying in the middle. We got the test of value high. It did actually test value low. So hypo 2 did not work out either. Hypo 3 did work out. We looked for an open auction. We looked for a test higher towards value high, and then we're looking for a rotation down. And our target yesterday was set at 2260, and that worked out almost completely. It was very slow and very, very frustrating trade, to be honest. It just didn't seem to go anywhere. So here's, so again, hypo 3, this is what it looks like. Okay, an open auction, push up, rotate down to the lower end of the range, pull back to the mid area or so, and then rotate down towards 2260 being the target circled there. Here it is. Push up, fall down to the lower end of the range right there, pull back to mid right there, right on the dot, and then rotate down to finish at 2260. So it's almost not that this is what's intended with these trader bites, but that was almost spot on. So this is hypo 3 playing out. However, which as I said yesterday, if you roll back that video, and again, these videos are there, they're permanently there. You can always hold me to account for what I said versus what actually happened, and I think that's pretty unique to our business. But the caveat here is if you look at the actual volume, which is the bar, which are the bars here versus the 20-day average, which has been falling. So you can see the 20-day average, you know, these little lines, yellow lines, is where volume is expected to be within that time slot. That's a 15-minute chart. Volume's very low. We finished yesterday with 500,000 or 560,000 contracts. Let's pull up the composite. So yesterday we got 564,500 contracts. On the day session on RTH. Remember, our normal or most common, not normal, but the most common volume for the day session is 1.3 million. How do I know that? It is the mode. It's the statistical mode right here. Going back to October '03, the statistical mode is that we do about 1.3 million contracts per day. And what we consider normal is what you see here as value area high at 70%, which is one standard deviation from the mode, not the mean. One standard deviation is 1.6. The lower end of the first standard deviation is 800,000. So we were actually below what we would call normal and started to move towards the second standard deviation with the volume that we have. That's in layman terms, there isn't anything happening right now. The volume has dried up, and it's we're heading into Christmas happens to be over the weekend, and folks have just taken off for the week. And you can see the range has dropped as well, although yesterday's range was 8.25 points versus 7.25 the prior day. We had some selling, and overall, we haven't done much. We pushed up, and essentially, we've been sideways for quite some time. We've been consolidating for quite some time. If I move this up, this profile up to the FOMC day, you could see that it's pretty thick. There's just a lot of consolidation in here, and the market's kind of rotating back and forth. Yesterday, we hit the close, the naked close of the 16th or the 19th. So it's kind of rotating about itself. There's not much direction going on here. For volume, the bin size I use is 100,000 contracts. So with that being said, looking at the overnight session here, I do that every day. With that being said, looking at the overnight session, nothing to report here. The market continued lower. Remember, we had an impulsive move down, so the expectations for a pullback continuation down into the next session. The auction continues, people. I mean, it's the auction does not take a break, and it's not constrained by time, right? So the only time it's constrained by time is when the market stops or when we have economic releases. And so overall, we had an impulsive move down, we had a pullback, and then we have a continuation lower. So the expectation coming into the overnight session is that we would likely see a lower low, which we did. Once we put in the lower low, we have been completely Gaussian here, completely balanced, and sitting right in the middle. The volume is relatively low. I think it's at 80 something thousand. Cannot read that very well. So volume's at 80,000, 80,700 or so, or 89,000, including the reopen after the pit close. So 89,000 versus 180,000 or so, which is what lately has been the norm. So it's pretty dry overnight session. Not much to take from it. For today, it's tricky because we have rotated down, but we have not really gone anywhere. So let's expand this profile forward. You can see we filled in a little bit higher 2 days ago, and then yesterday we started to shift that volume lower. You can see that coming lower, and we're starting to fill in, start continuing to fill in lower and lower. The overnight low, you notice the overnight low here, 2250.50, is right up against the prior week's close. It's up against the composite low volume node right here, and I'm expecting that to get retested today. So the primary expectation for today coming in, if this is to behave normally, is we open right here in the 2259 area, open auction. I'm expecting the market to explore lower, find a base, and then I expect us to rotate back up towards yesterday's range. That's my primary hypothesis for today. The ideal situation is actually hypo 2, which is less likely. Why am I expecting it to base and turn up? Because this is where we have based and turned up in the past, and that's all I can lean on with my hypothesis, my primary hypothesis. I'm expecting the market to repeat the same auction. We've traded up here for 2 days and we have fallen off. We're likely to retest that range, and that's what I'm expecting. The secondary hypothesis is an open auction that pushes up into the prior day's range. I'm looking for a push all the way up to 2262.50 or so, and I'm looking for sellers to step back in and take it lower, and then to bounce back up once we take the overnight low out. This is hypo 2. Okay. What I'm not expecting is for it to rotate and start dropping off, which would be hypo 3. I'll save you the hassle of having to draw that. That's all I have for you for today. It's 8:15 here in Chicago. I'll let you prepare for your day. Thanks for listening in, and hopefully you're gaining some incremental confidence in what you're doing by watching this on a day-to-day basis. Please hit the like button as you head out. I appreciate your help, and I'll talk to you tomorrow for the last time this year. Good luck, and I'll talk to you soon. Take care.